where today's topic for discussion is Section 135 CSR, an act by itself. In a famous Tamil film of Rajnikant, who is struggling to earn a living, all of a sudden he gets a huge amount of money and is told that if he spends all the money, he could keep a portion of it for himself. He starts spending the money on all the vices, but finds that instead of depletion, he earns more. He then realizes that when you have money to spend, it is very difficult to decide how to spend judiciously. A similar situation was created for companies by Section 135 of the Companies Act. For the time immemorial, companies were told to cut costs, spend less, etc. And all of a sudden, they had to spend a minimum prescribed amount on causes which may not necessarily increase their revenue. For companies who had been spending on social causes already, this was not a big challenge. But yes, now they had to identify between allowed and not allowed spending. For many companies, it was almost unthinkable to spend on anything other than business. Some felt that this section will not survive and will be repealed at the earliest. While MCA added more and more areas for expenditure under CSR, the projected amount not being realized, MCA started issuing notices and issued notices to more than 5,000 companies who had not spent their CSR amounts and also launched prosecution against them. Against almost more than 360 companies. It is understood that more than 120 companies have compounded their offense till date, and many are in the process of doing so. However, before compounding, these companies were made to spend their outstanding amounts and provide evidence to NCLT for having done so. NCLT also, on its part, has asked many of these companies to provide evidence as to the efforts taken by them to identify projects for spending as stated in the director's report. MCA also has been very proactive as well as reactive to the needs of the companies and has issued clarificatory circulars and FAQs from time to time. But they'll always mange more. It is pertinent to the note that number of companies who have complied with Section 135 is steadily increasing. We had gone through the NCA CSR data portal and found out very interesting data points. I will request my team to share those points. As per the data available in CSR data portal of MCA, the number of companies which undertook CSR spending in 2014-15 was 16,548 and has increased to 24,932 in 2018-19. And the corresponding amount spent has increased from 10,066 crore to 18,655 crore, although much less than the amount anticipated by government, still substantial and significant. Ministry of HRD and Canara Bank had set up a joint venture to utilize CSR funds to fund higher education infrastructure. This joint venture has not made any great progress despite its laudable goals, as CSR funds were very hard to come by. Even public sector enterprises are not an exception when it comes to CSR spending. They too haven't exhibited their enthusiasm in full measure in CSR spends. Perhaps to motivate and recognize the corporate sector, many institutions like BSc Limited, ICICI, and MCA themselves have instituted CSR awards too, and many companies have been conferred with these awards. Still finding that substantial portion of the corporate sector are either not complying with the section in toto or partially complying, Government of India thought it fit to amend Section 135 and insert provisions enabling initiation of criminal prosecutions on the company, its directors and officials who were responsible for CSR spending. Due to strong reaction from the industry bodies and other organizations, government did not bring this provision into effect. They have now inserted monetary penal provisions instead. One of the senior officials of MCA in a very lighter vein observed in a seminar that CSR was perhaps the only provision which was completely board driven, unlike even the business of the company, which is management driven. It is very pertinent to understand the import of this observation. Over the past 6 years of the CSR provisions being effective, no major changes per se were made to the original provisions. However, now based on the experience and the manner in which corporates have been complying and spending on CSR activities, MCA has amended both the sections and the rules. Definition of CSR seems to have undergone a change from being inclusive to exclusive. Ongoing or multi-year projects are now recognized. International agencies have become implementing agencies or can be becoming implementing agencies. CSR policy from being a statement of intent has now become a statement of approach, including the guiding principles for the management to follow. CSR reporting has been made more prescriptive and more informative. CSR is no longer seems to be an additional KRA for the secretarial or HR or marketing department, but has assumed significance that companies will have to identify specific teams to manage this function and require deployment of personnel with specialized skill sets, if not done already. Much as individuals are encouraged to commit time and money in social activities, companies as corporate citizens are also expected to commit time and money on social activities. This also aligns with the objectives of business responsibilities, SDGs, etc. This webinar will attempt to highlight and understand the changes which have been made, the issues arising therefrom, and the plausible solutions thereto. With this brief introduction of the theme of the webinar, I will now introduce our first speaker, Mr. Pramod Kumar Rai. Pramod Rai, welcome, sir. Pramod Kumar Rai is a fellow member of the Institute of Company Secretaries of India and a law graduate from Delhi University with over 23 years of experience in the corporate sector. He is currently Associate General Counsel with Nestlé India Limited, a leading public sector listed FMCG company with market capitalization of over rupees 1.5 lakh crore. He heads the corporate legal, governance, compliance, and investor relations function. He is also a market compliance officer for the South Asia region comprising India, Sri Lanka, and Bangladesh. He has been with Nestlé for over 16 years. Before joining Nestlé, he worked in the packaging and automotive industry for 8 years, leading the legal, secretarial, insurance, audit, and investor relations. He has been a speaker at programs of NIRC, of ICSI, ASSOCHAM, FICCI, and regular faculty of MSOP sessions conducted by NIRC of ICSI for the aspiring company secretaries. Last 4 years, he is a member of the Secretarial Standard Boards of ICSI representing FICCI. He is also a member of the Quality Review Board of ICSI since 2020. So, welcome, Pramod Rai Sahab, and the session is yours.
Very good morning to the distinguished speakers and participants. Thanks, Mr. Vishwanathan, for setting up the tone and the context. Only to add a little bit of more guidance which is available is guidance note issued by the Institute of Chartered Accountants of India, Institute of Cost Accountants of India, and also sometimes Institute of Company Secretaries of India will be coming out with a guidance note. So it is my pleasure to share my thoughts on this important subject, which has gained traction not only in India, but across the world. We are probably one of the few nations where the CSR provisions are mandatory since 2014. The topic given to me is on conceptual changes due to amendments in Section 135 of the Companies Act and new CSR rules notified in January 2021. It will take a long day, let me tell you, to discuss nitty-gritties of what are the changes. And in this limited time, what I will do is I will try to capture some of the changes which will have significant impact as far as implementation is concerned by the corporates. Please be aware of the fact that these are my personal opinion. This doesn't represent the opinion of the organization. And we are all in the learning curve. We are all learning right now. The provisions have just come in. There could be a possibility of interpretation here and there in this regard. So please bear this in mind. So what I will do is I will pick up some of the definitions like CSR, the definition of CSR policy, what is annual action plan in pursuance to the CSR policy. Then I will pick up some instances of impact assessment expenses, surplus, excess spends, capital assets. Then what is administrative overheads? There are a number of questions which are coming, which talks about administrative overheads. I'll try to elaborate a little bit on that. Requirement of what implementation partners need to do. What do you really mean by ongoing projects? Interestingly, the role of board and CSR committee, as Mr. Vishwanathan has elucidated already, has gone up substantially. I'll pick up some of the interesting role which has been added to the board as well as CSR committee, and then also on establishing internal controls and governance norms to ensure that CSR provisions are followed in letter and spirit, and then I'll conclude. So I'll try to pick up few points with regard to, first of all, definition of CSR policy, corporate social responsibility. Earlier, if you see, the definition was inclusive and open-ended and subject to interpretation. Now, what Ministry of Corporate Affairs has done is to avoid all kind of confusions. They have bring up a definition which is more definitive in the sense it starts with it means, doesn't means and includes. It says that it means the activities undertaken by a company in pursuance of its statutory obligation. Please understand the word and the meaning of statutory obligation. So right from 2014, it has been a statutory obligation. It is not a voluntary provision. Let me make it very clear right from the beginning. It was never meant to be a voluntary provision. Then there are two specific additions in this. One is any activities which are benefiting the employees. There are a lot of confusions right now. I have seen number of articles on Google on talking about if at all there are 100 employees, one employee is benefited, will it qualify at CSR? Will it not qualify as CSR? So my answer is that benefiting employees doesn't mean that you cannot implement a project where the employees are incidental beneficiaries, to say so. Similarly, sponsored for deriving marketing benefits for its product or services. Any activities which are where the payment is made for sponsoring, but it has opened up the floodgates, and we have to go by the spirit of law and not really the words that are used here, which says deriving marketing benefits. So these are all case-to-case basis. It is up to the professionals who are interpreting it. It is up to the CSR function of the company to decide on programs which has a larger view rather than just promotion of products or expenses or services. Just this has to be kept in mind. If you come to CSR policy, the definition has also been brought into the rules. Rule 2F of the company's amendment rules has brought this definition. It is very clear. It clearly says that it should have, for example, a statement containing the approach and direction given by the board. So one is it has to have the statement containing the approach and direction. What does it mean? For example, if the company is in the business of foods, for example, or in the business of manufacturing cars, they have to pick up the location. They have to define that, for example, what they want to do as a guiding approach. For example, if you pick up an activity which is, for example, upliftment of water or sanitation. So it has to be in the area which is located. What is the approach of the company has to be clearly coming out, all 4 or 5 broad buckets what company wants to do. Then it also says that you have to include guiding principles for selection, implementation, and monitoring of those activities. The main thing which is added is it should also include guiding principles for formulation of annual action plan. Most of the time it is misunderstood that annual action plan has to be part of the CSR policy. It is not the case according to me. It is only the guiding principles for the formulation of annual action plan which has to be part of the CSR policy. Again, going back to the annual action plan, now there is an additional responsibility on the board to approve the annual action plan. When designing these programs or projects, we have to be really careful to ensure that we name the project, we name the MGO partner, which activity it is covering under Schedule 7, then what is the budget, what is the location, who all are beneficiaries, what is the implementation plan, how you will monitor and report the activity within that particular program or project, and what is expected from the impact assessment. Impact assessment is a word which is used nowadays everywhere, because it's something to do with the project or program. Like, what will be the impact? You have to decide as a company that what impact you are expecting from the program. For example, if it is a girl child education or adolescent education, then you have to quantify that there is, for example, X number of increase in the number of girls who are going to the school which are under 18, or these are the decrease in the number of girl childs who are who had been going to the who have stopped
Dropouts.
college or school. Yes, dropouts. So these are the things which are part of annual action plan. It has to be defined. It has to be formulated in a way that is very transparent, but that don't need to be part of the CSR policy. It's a dynamic document which needs the approval of the CSR committee and the board anytime and every time it is required to be modified. This is the simple rule. If you go to CSR expenditure, lot has been defined now. It says that it has put a responsibility on the board to ensure that administrative expenses not go beyond 5% of the total CSR expenditure of a particular year. There has been a lot of discussion on what includes administrative overheads, what doesn't include administrative overheads. It simply says that any general administrative expenses for the CSR function of a company as part of overheads. Anything which has to do with implementation of the project, designing of the project is not part of the overhead. Plus another part which in this year which has been added is to give companies more leverage as far as impact assessment is concerned, to encourage companies to go for the impact assessment beyond projects which are 1 crore and where the layout is more than 10 crores in past 3 years. So in such cases, the impact assessment expense of up to 50 lakhs is allowed, or 5%. 50 lakhs. To my understanding, this is just a figure that this is just an enablement that ministry has given to the companies. Those companies who were already doing impact assessment were expensing out from the profit and loss account, but up to an amount of 50 lakhs now it is allowed under CSR expenditure itself. So it's a rather facilitation, not really, according to me, a limit which has been prescribed. Then let me go into the percentage, or let me go into the CSR implementation partners. A lot has been talked about all the time on this. According to me, from company side, what I will look at is when I'm shortlisting an implementing agency, whether they have the registration certificate, right registration certificate or not, whether they have Section 12A and Section 80G certificate from the income tax authority or not. Whether they are registered with the Ministry of Corporate Affairs by filing Form CSR1 is something which we need to, as a company, look into it, although it is applicable from 1st of April 2021. But this can be already built in our annual action plan as far as implementation partner selection is concerned. There is a concept of ongoing project which has been brought into the Companies Act, and it has been further clarified in the rules. Lot has been talked about ongoing projects. If it is for 3 years, if the money is not expended, what will happen? According to me, complete freedom has been given to the CSR committee and the board to decide even on the ongoing projects. While there is an ongoing project, for example, of an amount of 100 million for 3 years, company has to ensure that the budget for that particular financial year includes some amount out of that 100 million. It could be 50%, it could be 40%, it could be 20%. That's up to the company. And even the company can change in between the ongoing plans for and the timelines and the layouts for the ongoing projects. There is no bar on that. The role of CSR committee has only extended to the extent of CSR annual action plan that has to be prepared. All other things remain same as far as role of CSR committee is concerned. As far as role of board is concerned, lot has been brought to the responsibility of the board to ensure there is an internal control. For example, just to specify some, for example, the board shall satisfy itself that the funds so disbursed have been utilized for the purpose and in the manner approved by it. So there is an added layer which says that the ongoing projects, in the case of ongoing projects, board shall monitor the implementation of the project, which was earlier only the part of CSR committee and the CSR head. Then they are also required to approve the annual action plan, which is now again an added responsibility. When you talk about annual action plan, it contains everything, project details to impact assessment. Every detail is already there in the annual action plan. And if there is any change in the annual action plan, it has to be approved by the board, and also the reasonable justification has to be there. quantum of administrative overheads of 5% has also been now put on the board. Board has to ensure that company doesn't spend more than 5% in the administrative overheads. Then there is host of other responsibilities, like they need to take note of the impact of assessment reports, and that will be annexed to the annual report on CSR, which is a huge change in the way we do the reporting of the entire CSR CS under the annual CSR report. Then there are other provisions like setting off. If setting off is required, board is required to pass a resolution, which again brings back everything on the board's responsibility. There is another role which has been added, which is according to me very significant as far as implementation of CSR rules is concerned, is that CFO has been mandated to certify that the funds for CSR activities so disbursed have been utilized for the purpose and in the manner as approved by the board. It's a huge responsibility on the CFO, and it also will enable board to rely on such certifications. Therefore, according to me, when I would like to elaborate a little bit on this part, because there is a need to bring an internal governance as far as entire way the funds are disbursed and utilized by the companies. The CFO is required to, as a board and as a CFO, they are required to ensure, first of all, there is a system where they ensure compliance. Then they need to ensure that what is the total CSR funds available. So every check and balance has to be provided as far as overheads are concerned, impact assessment cost is concerned. They need to have a clear metrics as to who owns the activities, whether it is HR or finance or administration or a separate CSR department. There are enough approvals for going ahead and giving the project approvals. There are enough authorizations to the people to sign, for example, the contracts with these implementing agencies, and to check the veracity of the implementing agencies, their backgrounds, etc. Then how the ongoing projects are designed. So all these, for example, what are the disclosures that are required to be made has to be reckoned in advance. For example, what is my total CSR spend, what will be my excess spend, what is the surplus generation out of the activities, how the accounting of these will be done, what will be the monitoring framework and review mechanism, what is there any need to operate a separate account, for example, on the ongoing projects besides what is prescribed under law. So I would stop there in the sense, in terms of these new structure that need to be brought in by the company to ensure the governance of CSR and full compliance in letter and spirit. To conclude, I would say, for example, the intent of CSR provisions was, according to me, never voluntary. Number two, philosophy remains that CSR activities is for the purpose and the society at large. Whenever having any discussion within the company, this should be the guiding principle according to me. Preference should be always given to a local area and areas around it where it operates, and this permits you as a company to do any activity which is required under the CSR. There is no prohibition according to me under CSR rules or under the schedule to carry on any activities if you fulfill a larger objective of serving to the local area and around it. It needs to be sensitized amongst the board of directors of the company and other stakeholders. That is our job. Those who are compliance professionals, my advice would be to do a lot of advocacy and in and outside the company, to involve yourself from the time to time in these projects or programs that are designed. Be part of internal governance framework and review all the expenditure vis-a-vis reporting required. Also, we need to ensure that all the directors do visit some of the locations where you are carrying out the CSR activities to continue to get their buy-in, and it also gives them a sense of comfort that the company is doing the right things. Then according to me, there is no harm in taking inputs from experts. Authorities nowadays, MCA is very approachable. They issue the guidelines and the FAQs sooner than expected, as soon as somebody goes and goes for some query to them. So reach out to them. don't go into the words and phrases which creates confusion for the company or within the disclosures. Always ensure that the internal governance framework works in the company. There is quarterly meetings, there is monthly meetings, there is proper framework where CFO is involved, legal head is involved, other stakeholders from CSR are involved. Sensitize them from time to time during the year. Always watch out the timelines. According to me, this is very important. For example, in Q3 itself, there is a need to review everything, because in Q4 for listed companies where meetings are few, where it is difficult to organize a board meeting or a CSR committee meeting, it is better to check everything in Q3, so that at the end of the year there is no such ambiguity or confusion which remains. Then according to me, the most important thing is to write everything in the project or program for any CSR activity and ensure that it is mapped to Schedule 7 activities, and ensure that every aspect is captured in the annual action plan. Even if, for example, there is an excess amount generated or set off, please make it part of annual action plan. What will be the requirement? Instead of waiting for 6 months to transfer to the fund, for example, we can very well transfer before even the financial year is closed in those funds, if at all we are of the view that this amount will not be expended. It is actually, to conclude, complete freedom has been given to the company's board and CSR committee to design any project or program, so far as the intent is society at large. At the end, I would only say that business will be successful only when the society around us are successful, otherwise not. So I would stop there, Mr. Vishwanathan. I hope I am on time of 15 minutes allocated.
Thank you. You were very much on time. Yeah, you have highlighted a lot of things from a practical standpoint of what needs to be done. But the correct thing is that check the spirit of the law. And like our mentor SVS always used to say, that intent of the law is more important than the draft which is presented to you. So the intention, yes, the spirit of the law is very, very important, and compliance of CSR with understanding the spirit of the law, I think then we will be on right track. I will now request the next speaker of Sri Sudhakar ji to commence his observations. Before that, I will introduce, actually, for many of us, Sudhakar ji doesn't require any introduction, but but still there could be some youngsters who may require to understand what he is about. He is a fellow member of the Institute of Chartered Accountants of India and Institute of Company Secretaries of India, and qualified secretary of the Institute of Chartered Secretaries and Administrators UK, and a law graduate from Mumbai University. In fact, during the pre-session, one thing which we learned from him, in fact, I learned from him, is to get up early morning at 4 o'clock so that you get good 3 hours of work time. It's a great lesson I have learned today. Since 2005, working with Reliance Industries as Vice President Corporate and Secretarial, has worked with Berger Paints Limited for about 15 years as Senior General Manager, Finance and Accounts. Mr. Sudhakar is a member Secretarial Standards Committee of ICSI and Vice Chairman of Expert Committee on Secretarial Standards of ICSI for the year 2021. Member Secretarial Standards Boards of ICSI from 2016 to 20, and Vice Chairman of the Secretarial Standards Board of ICSI for the year 2020. He was also a member Vision Core Group and Vision Implementation Group of ICSI, and a member of several other committees. He has been a regular faculty at the Institute of Directors. He has been a guest faculty at NISM.
That is sufficient, Vishwanathan.
Yeah, I think that is all, because otherwise I will eat into your 15 minutes. So I think I'll stop at it, and I will open the session for you, sir.
Yeah. Thank you, SACE Governance Advisory, as well as Mr. Vishwanathan, and for giving me this opportunity to share some of my thoughts on corporate social responsibility, especially the revised changes which have been brought in. And good morning, all participants. And my greetings to all of you, and my prayers are there for the safety and welfare of all of us. And unfortunately or fortunately, these days we are still passing through the difficult times, but the way the way we are behaving, 95% of the people have given up wearing the masks. I really wonder that what motivates them to do away with this, because the government is still advising that the cases are increasing, and I am falling in that 5%, and I'm sure every one of you are falling in that 5% who are wearing masks. If not, my request to you is kindly do that, because the reports are very disturbing. The second wave is going to take place. I am not panicking you, but we have to observe the caution. When we have to talk about CSR, I thought we should talk about this mid-COVID times as far as the cases are concerned. And in fact, I was listening to Pramod very attentively for one reason, that what he is leaving for me. In fact, he has dealt with legal as well as the practical aspects. When you are the second speaker, it is always you have to be very attentive that what he spoke and what you have to speak. And sometimes now I don't know what Rema is going to do, who is my third, the panelist, what she is going to speak, I really don't know. But fortunately, I have a small presentation which I will share with you. And I am not going to speak where Pramod has spoken already. And because to that extent, he has saved my time. So I think I will take about 10 minutes time, Mr. Srinivas, Sir Vishwanathan. And I think I have the rights to, yes, I got it. Okay, let me put a disclaimer again that what the way Pramod has mentioned, I always put this disclaimer that whatever the views I am expressing, these are all my own views and nothing belongs to the organization in which I am employed. I also echo the sentiments expressed by Pramod that these rules are very new, and what kind of interpretation, I mean, there is still a lot of scope is there for interpretation at several areas. And whatever I am also dealing with is to the best of my interpretation abilities. There may be some kind of a difference of opinion or a different views may be there. Let us learn from each other. As Pramod has mentioned that CSR is not to be taken as a mere compliance point or a tick box exercise. The corporates or businesses can flourish only when the society around them flourish. Hence, CSR is to be taken very, very seriously. And as far as the India is concerned and our Indian culture is concerned, we all know that we belong very strongly as far as charity and philanthropy is concerned. But charity and philanthropy and corporate social responsibility are two different things. In the charity and philanthropy, there may not be any continuity. It may be one-off exercise also, whereas in case of corporate social responsibility is concerned, and it is to be done on a consistent basis, and it is to be also for the benefit of the society and not only for the benefit of a particular segment of the society. Projects are to be planned and designed very carefully and to be monitored very effectively and efficiently. In fact, the corporate social responsibility is one of the major what's called aspects of Companies Act 2013. In fact, if any of you have heard the debate which was taking place on Rajya Sabha in 2013, Mr. Sachin Pilot was emphasizing more on the section 135, that is corporate social responsibility. And there were also reports that the outgoing Congress government at that point of time has pushed the Companies Act 2013 to take the credit for the CSR. In fact, despite the fact that the Companies Act 2013 is a rule-based legislation, the rules were not ready, but still the act was enforced. Main reason for the outgoing government at that point of time was to take credit for the CSR. Initially, it started like a comply or explain approach. And ultimately, it has, in fact, the government has attempted to impose even criminal provisions for non-compliances. To that extent, the pendulum has swung from one extreme to the other. It was initially that you comply with the provisions, and if you are not able to comply with that, the board has to explain it in its report why you could not comply with. Subsequently, what happened was that ROC started issuing show cause notices that why you could not comply with, you have to give a cause for that. Though it was already explained in the board's report, but again, a show cause notices were issued. Ultimately, in the Companies Act 2019, when the Companies Amendment Act 2019, even the imprisonment was there for non-compliances of Section 135. There was a huge commotion among the corporate circles, due to which that section was not notified. And in the Companies Amendment Act 2020, that has been subsequently revised as well as modified. Though the provisions are decriminalized now, that means the criminal provision is not there, imprisonment is not there, but as far as the civil offense is still continuing, and the penal provisions are very, very stringent. Because of this revised rules and the provisions, the board and CSR committee's responsibilities have been increased tremendously. To ensure compliance with CSR provisions, the way the things have been expected to do the compliances, according to me, the organizations should have an exclusive CSR department. Lots of opportunities are there for the professionals. It is up to us to work upon and to grab the opportunities, whatever are available. The board shall ensure that CSR activities are undertaken by the company itself or through, we all know that it can be done through any other entity, but now the registration of those entities, that means the Section 8 company or a registered public trust or a society, the registration with under Section 12A as well as Section 80G of the Income Tax Act 1961 is mandatory. The company may establish the Section 8 company or a registered public trust or a registered society and get the registration, or it can do through any other agencies which are satisfying these requirements. In such case, there should be a track record of 3 years should be there. Now, what is going to be the impact of this is that since the implementing entity registration with the income tax authorities is mandatory, it seems the tracking is intensified and scrutiny will be more in the coming years. The agencies which are going to implement the CSR activities, their operations, the way they are implementing the things, the way they are spending the money, the scrutiny is going to be high according to me, because they are going to be tracked very carefully. And as we all know that the regulators are sharing the information these days among themselves. Registration of the implementing agency, the entity rather, with the Registrar of Central Government is also mandatory from 1st April 21. And the implementing entity has to file a CSR 1 form and they have to obtain the unique CSR registration number. With this identity, the central government monitoring and scrutiny of implementation agency activities are also going to be intensified. Now, the responsibility of the board of directors has increased manifold. As Mr. Vishwanathan has mentioned that this is a board-driven section. But now, earlier also the responsibility was there, but now the responsibilities what have been imposed upon the board are tremendously increased. The board of a company shall satisfy itself that the funds disbursed have been utilized for the intended purpose and in the manner as approved by it. The saving grace here is that CFO certification. So there is one more person who has to put his neck into the nose along with the board itself. In case of an ongoing project, the board of a company shall monitor the implementation of the project with reference to the approved timelines, year-wise allocation, and shall be competent to take modifications, if any, for the smooth implementation of the project. In case of an ongoing project is not completed, to transfer such amount to the specified fund. Now here, what happens is the responsibility of the board is tremendous to identify the ongoing projects especially, because these ongoing projects are to be completed within a period of maximum 4 years. If the project is not completed, the amount is to be transferred to the specified fund. Now the question comes is that in case the project is half complete, what is the fate of that project? Who is going to complete that? Whether the companies in the coming years can revive that project and can do it, but the amount allocated is already transferred to the specified fund, because beyond 4 years, that means the year plus 3 years, there is absolutely no provision for any kind of extension with or without approvals and all. You have to transfer the money. Once the unspent money is transferred, what will be the fate of that uncompleted, unfinished project is a big question mark. There would have been given some kind of a carve out which has not been given. Maybe a kind of representations may have to be made so that with some kind of a leeway is to be given, because sometimes it may so happen that there are genuine reasons for completion, for non-completion of the project within the time period. So at least there, apart from the force majeure also, there may be some genuine reasons. In that kind of circumstances, some kind of a leeway is to be given, which is not there as of now. As far as CSR committee is concerned, this is the committee now gaining importance and prominence. In fact, yesterday I was addressing one webinar wherein I was about the committees of the board as per the Companies Act and listing regulations. At the point of time I was mentioning that the most prominent committee is the audit committee, after that NRC. Now, according to me, even the CSR committee has got a lot of importance and has a lot of responsibilities which it has to discharge. It has to formulate and recommend to the board an annual action plan. Apart from the CSR policy, what it has to recommend to the board. Now, under the revised rules, it has to also formulate and recommend an annual action plan in pursuance to that CSR policy. And this annual action plan should have this, the contents of that action plan should be the list of projects, CSR projects and programs, manner of execution, modalities of utilization of funds, monitoring and reporting mechanism, and the impact assessment. These are to be given in the annual action plan itself. Though we can say that 5-6 contents are there, but every content itself is a big project in itself. And this action plan is to be prepared by the CSR committee. That is to be recommended to the board, and the board has to approve the annual action plan. And then the CSR committee's responsibility, of course, as of the board also, is to implement that action plan within the timelines given. The Pramod has already mentioned about this transferring of unspent money on the CSR. Now the question is that, as I was mentioning, in case of ongoing projects, if a CSR project is not an ongoing project and the amount is not spent, obviously you have to transfer that money. Absolutely, there is no issue. There also the question may come up is, suppose if you have already taken up some part of the project and is unfinished, then what will happen? If you have not started a project as such, the amount is transferred, it is one way. Second thing is, you have started, but half the way you could not complete that project. And then that remaining, whatever the unspent money is there, that is to be transferred to a specified fund. But my question is, what is the fate of that unfinished project? Whether it is year to year or ongoing project. So it is the responsibility of the board as well as the committee, especially in case of ongoing project. The timelines should be prepared in such a way that the project should be completed within a maximum period of 4 years. And while you are what's called as working out the timelines, necessary provision is to be made for the contingencies also. Some kind of force measure, some kind of cushion is to be always provided. Now, overheads and surplus generation, administrative overheads are to be within that 5% of the CSR expenditure. So close monitoring is required so that you will not be overspending the money. And similarly, any surplus which is arising out of the CSR activities, that is also to be utilized for the CSR project only, or it is to be what's called as a transfer to the unspent account if any unspent money is there. And the welcoming feature is that in case any amount is spent in excess of the requirement, this is one thing which actually some corporates, who are overspending. If you see in case of Reliance Industries also, we always end up spending more than what we are supposed to spend it. I am not talking about because Reliance we are spending it, but there are some companies, when you take up a project, sometimes you cannot say, okay, I will spend only the 5% of that, the 2% of my average net profits of the previous 3 financial years. When I am taking up a project, suppose if it is a 100 crore project and I am supposed to spend legally 70 crores only, I cannot say, okay, I will defer the remaining to the next year. I will end up spending in that particular, because of a continuity of my project, that 30 crores, whatever I have spent in excess, I cannot set off earlier. I mean, earlier I could not have set off in the coming years by obligation. Because what the regulator was telling earlier was, whatever you spend over and above that, whatever you are supposed to require, that you have spent it on your own. I am not concerned with that. As far as the next year is concerned, again, you have to spend the 2% of the money only. Now, under the revised rules, they have given an option that amount spent in excess of requirement, it may be set off. And that also they have given in the succeeding 3 financial years, you can set off that. It is a most welcoming feature. Impact assessment, yes, it is to be worked out. Impact assessment means primarily, in fact, we had to understand that, but to the best of my understanding is when you spend the money for the intended purpose, whether that purpose is achieved or not achieved, say whether it is a health, education or anything else, whether the kind of impact what it has to cause on the society, And similarly, whatever the intended measures are there, have they been really met or not? That is the major purpose of impact assessment. And it is to be done through the agencies who have to go and conduct a study of the impact assessment, and they have to submit the report. That CSR committee has to submit it to the board, and it is to be attached to the annual report of CSR, and all these are legal requirements. But what kind of agencies we have and how much study they can make and all, this is yet to be seen. The impact assessment, according to me, is going to be a lengthy process, and it is going to cost definitely to the company. What the provision it has been made is 5% of the CSR amount or 50 lakh rupees, whichever is less. Whether this amount will be sufficient for large companies when they are getting their impact assessment conducted is a question mark again. I don't know why that limits are to be fixed as far as this expenditure is concerned. My final thing is the creation and acquisition of capital assets. The CSR amount can be spent for acquisition of capital assets or for creation of capital assets. These assets are to be in the name of that Section 8 company or the registered public trust or the society. It cannot be in the name of the company. Till now, whatever the assets are there in the name of the companies, they're also to be transferred to those companies within a period of, I think, 6 months, and another 90 days time has been given. Question is that whenever you're transferring a capital asset, it is going to have that impact of stamp duty. Now, it is an unnecessary expenditure, whether the stamp duty waiver will be given, and if so, that, or if not, it is under which head this stamp duty is to be booked, whether it can be capitalized or it is a revenue expenditure. Similarly, whether it is going to be within the 5% of the overheads, that is, clarity is not there. CSR reporting, a very elaborative reporting format has been prescribed as Annexure 2, and this is an assignment in itself as far as the company secretaries are concerned. Apart from the board's report and the corporate social governance report, what we struggle with at the end of the year, apart from our audits and other things, another big report what we are going to come from the financial year 21-22 is concerned, that is CSR reporting. Now, for this, it is advisable to collect the information according to me on periodical basis. Pramod has already mentioned that in the third quarter itself, we should be started working on this. I may go a bit further that in case of large companies, on quarterly basis, start compiling this information so that by the time of January, February, you're already ready with the information up to 10 months, and only for the remaining 2 months you have to add on and your report will be ready. With this, I conclude my presentation. Mr. Vishwanathan, now any questions will be there, that time we can take up. I'm sure I also could meet my time limits are concerned.
100%, sir. You have not overspent your time. You are within the CSR limits. I will now request Ma'am Rama Mohan. She had joined and we lost her for some time. I think she has. Ma'am, you're there. Can you unmute yourself? Yeah, thank you. I will introduce Ma'am Rama Mohan to you. She has had more than 25 years of experience in education and corporate social responsibility, and worked with various organizations such as Times Foundation, Times Group, Sulochana Devi Singhania Trust, Ford Foundation, and Nsc University of Baroda. She has designed low-cost pedagogic methods for primary education to impart English language skills to children from disadvantaged communities. She has also been part of the core team which designed and implemented award-winning education programs such as Teach India, Lead India, Teach English programs. She is a firm believer that education needs to be tailor-made to suit the requirements of communities, and that value and ethics need to form the core of the educational system. Her key skills are designing and implementing self-sustainable, low-cost development project platforms that align the synergies of various stakeholders for maximization of resources and impact. Rema holds a degree in management and law and is an alumni of prestigious Fortune US State Department Global Women's Leadership Program. She is currently the CEO of Nsc Foundation, promoted by the Nsc Group. Nsc Group CSR focuses on key developmental verticals of primary education, sanitation and clean drinking water, health care, environment, skill development. today NSC Foundation runs impactful large-scale programs in association with both central and state governments, national institutions of eminence, and other development organizations across 11 states and selected aspirational districts, impacting the lives of more than 10 lakh beneficiaries. I would request ma'am, from now both Sudhakarji and Pramodji have spoken from a compliance perspective. Now we would like to hear from an implementator's perspective, how she sees this new rules or the amended rules and the act. So over to you, ma'am.
Yes, sir. Thank you so much. At the outset, as the other panelists have done a disclaimer that the views that I express are mine alone and do not in any way reflect that of my organization. This is intended purely as an educational program where through our experiences or through my experience, I hope that the experience sharing can help others in similar fields. Thank you so much. And also Mr. Sudhakar, thank you so much for your kind words. Yes, I'm the last speaker and it's always a challenge, but I shall try to, fulfill my obligation. Can we go to the next slide, sir? So just to give a brief, sort of overview on the way we run the operations at NSC, the NSC Foundation. So next slide, sir. So NSC Foundation handles the CSR responsibility of NSC Group. We have, what we like to call as Seva and Save. So Save is where all our financial literacy and other, other such related activities are undertaken. And Seva is more of our corporate social responsibility activities. So the screen is not clear. NSC Foundation is an entity that is a Section 8 incorporated, and also we have a number of group companies that move into the, sort of transfer the CSR budget, that transfer the CSR funds to NSC Foundation. And also, if we were to see the structure, we have the board of NSC Foundation that oversees the activities of the CSR activities. Yeah, we can move to the next slide, please. Yeah, so this is the Save and the Seva, which I explained. Can we move to the next? Yeah, so this is the NSC CSR structure, where we have a number of group companies, and on a periodic basis, they transfer the funds, the CSR funds as per the expenditure into the NSC Foundation. The board of NSC Foundation oversees the activities, and there is a reporting back to each CSR committee and board of the contributing companies. Next, please. When we look at the governance mechanism, we have a number of both internal audits and others, in both the statutory audits and the compliance, as well as some of the non-statutory audits and compliance, which are more of external in nature. Next, please. The CSR approach that we have reaches the last mile. So we don't typically have a factory. We don't typically have areas of operations in and around our factories. What I was told sometime back, when I was talking to, number of years back when we were talking to MCAs, that and some of the, the gentlemen and officials who were involved in the initial drafting, they were actually talking of inclusive growth. So inclusive growth means that you can't have a factory, you cannot have operations, which is very separate from the area that they are working in. So you cannot have you have to have inclusive social development, which takes everybody along into the growth story. So what NSC, typically we do not have factories. So what we did was take a conscious decision to go the last mile, go into aspirational districts, and really whom we intend to benefit or our activities intend to benefit are really the most triple disadvantaged of communities. Most of our programs are long-term, they are large-scale, and they work in alignment with the local administration as well as the state and central governments. Next, please. So this is just a snapshot of where our operations are, how, what our spread and reaches, and the number of aspirational districts, the villages, and other things. Next, please. One of the interesting sort of review mechanisms that we have is we have got empaneled auditors where a monthly, quarterly, and annual review is undertaken. This is both on field and off field. So when we talk in terms of impact assessment, so an impact assessment for us is not a review of the outputs or the outcomes or the indicators that have been mentioned in the program. An impact for us is an end of the term assessment by an independent agency in addition to these monitoring and evaluation agencies, and that is undertaken as you can say as an applied outcome of the program. So let me give you an example. Whereas an auditor will go to the field to see if a child has learned in that quarter or in that 6 monthly, what are the term tests. So an audit which is on field will cover that. Are there teachers who have been empaneled? Are the teachers going to the schools or to the community centers? And whether the SMCs have been formed and other such related things. There's also a financial audit to say if there are 60 teachers who have been onboarded for the project, has the salary been paid? Is it into a bank account? And all the other sort of norms that they need to follow. But an impact assessment would say, is there a propensity for the child to self-learn? Is the child now interested in learning? Is the community or the mother interested to send the child to school? So impact assessment is a very different format which relies more on applied, applied indicators. And I think in the development field, when we really talk about impact, is something which is very, very large scale and long term. But anyway, be that as it may, it is now being used for the shorter term CSR programs. Let me again take a small step back and give you an example. If there is a road that is going to be built in the middle of a village, now after 5 years or 10 years or 15 years, what is the consequence of this highway or road that has been built in the middle of a village? Is it that there is more of income? Are there more hotels? Is there some sort of trafficking that happens there because of increased lorries being parked and other things? So impact assessment is a very, very long-term and very sort of a study which is quite, which studies the impact of a certain activity that has been undertaken. Can we go to the next, please? Yeah, so these are the recent changes that are there where you have an increased rigor on internal controls, reporting. There is a penalty clause, which I'm highlighting because those KMPs will have to be a little careful. Of course, there is, we have some sort of impact on the tenure of the project, the assets, unspent amount, excess spending, and impact assessment. Most of these things have been covered by the other speakers. So I would just like to give my sense of how how it impacts me as a CSR professional. Now, for me, CSR and the entry of the corporates into the arena of social development in a very structured manner, I see it in the against the backdrop of the changes that are now coming in, the FCRA changes and other things. We're looking at 30 lakh NGOs which are now in existence. But really, when we look at the sector, what really has been the impact on ground? Has there been a transition into development? So I think the CSR and the entry of corporates, which actually started with the inclusive growth story, has now stretched into really creating a very structured and professional manner of conducting the social and sectoral activities. And I think from that very overarching and a very broad ranging view, I think that's a fantastic thing to have happened in the sector, that we have we have the Indian corporate getting involved in the sector. Now, when we're looking at the implementation, of course, I know that there will be some clarifications that will come out by MCA. There have been some talks that they've had with the industry associations over the past week. Now, when we're looking at the employees, a lot of queries that are going around, whether employees can be benefited and all that is coming up. The answer is very pure and simple. No, employees cannot be benefited. However, when we look at whether we undertake activities in and around the area of operations where there may be workers and other people residing, I think the thought process is, yes, those are CSR activities that need to be undertaken, and those are included in the CSR. Marketing is another example of where an arm's length needs to be maintained. Therefore, for me personally, if I were to look at the contracts that we have, the MOUs that we have, I'll be very careful of the language that we are using. Arm's length on what constitutes business. Of course, we at NSC do not have the problem because our financial inclusion, financial literacy, and other such related activities are undertaken by a separate entity. International agencies coming into it. So far, international agencies have been requesting the government that they also get involved in the implementation of the CSR. But I think there has been, again, a very clear definition that, look, you can do your monitoring, you can do designing of programs, you can contribute your expertise, but implementation by international agencies has been kept aside. And I think really, when you look at the way these agencies are created, the way their reporting goes, I think that is a good thing, because it'll be very difficult to transfer money to them and get accounting, and also get a sort of an accounting report from them and other such things. We have been speaking to international agencies who are, who offer technical advice to us on our program. Of course, it's not for a fee or anything, but we then realized the way they were structured. Corpus transfer has now, I think corpus transfer was something that has been removed now. I personally feel that could have remained and helped foundations like ours strengthen, strengthen the core and keep aside something for a rainy day. So where all these things like where you say, there is a term extension, you need a little more money to do some activities, these type of things could have helped. The impact assessment remaining at 50 lakhs, as I again told you, that impact assessment is a very long term and a very detailed assessment of a study that is undertaken. And I agree with Mr. Sudhakar that it is very intensive and it is an expensive proposition. In our experience, a lot of agencies, the larger agencies, charge anywhere between 5 to 10 lakhs or more. For larger project. I'm talking about small projects which are in the range of about 2 crore or so, situated for one block and all that. I'm not talking about the 100 crore projects where it will be much more. So then this is going to be a challenge for us. And if we are coming to the end of a term of some 20 projects in a year, then of course this 50 lakhs is going to be a challenge. It's a good thing that the administration costs, which we always found a challenge, because if you had referred the earlier slide where we have the PME agencies and we have quarterly audits of the programs, then it's good that all these things like technical expertise, audit, and evaluation of programs, monitoring of programs has all been kept aside, which leaves 5% for purely for an organizational organizational as in the department administrative charge. And I think the financial year, one of the things I just want to sort of caution is that with this 1+3 rule of term, the approvals which we used to take in a very staggered manner over the year, because it's next to impossible to get all the approvals done at one go at the beginning of the year. Now, if we need to mention the program, the cost, the tenure, and everything upfront, that leaves us not much leeway to do in the next 3 quarters. So this approvals of the program, which I know many corporates also used to do in a very staggered manner, as and when their CSR committees used to happen. Now we need to be very cognizant of the fact that 1+3 rule means if you approve something in the 4th quarter, then obviously we lose that one financial year, because we've got it approved in the month of February during the fourth quarter board meeting, and then you lose that entire year. And yes, the meetings where we used to earlier only give a very detailed CSR meeting and CSR committee was the one briefed, we will now have to have an added layer where all these things will be also needed to be informed to the board, and where the action plans will have to be laid out, and so a lot of administrative other things. One more word of caution in addition to the marketing and employees and other things is that the capital assets, see, a lot of our program have some amount of capital assets that are going, that are created. It could be a water program, it could be a sanitation program, it could be a health program. So it's extremely important to get the paperwork in order, to do that in alignment with an SHG or an FPO or a Section 8 company or the local district administration where these are not there, and see that there is a absolutely crystal clear paperwork of the assets being transferred and the ownership of those assets to either an entity or to other developmental agencies or the society at large. So that has to be really carefully worked out. And for me, there is really no doubt in my mind that there is any amount that arises out of projects and other things, it has to be plowed back. If it is a community, whether it is community or others, and even if it is interest which we as a foundation earn from that amount that is transferred, it's always plowed back into the CSR. So I would like to stop here and ask Mr. Vishwanathan whether I've overshot my time, and I'm happy to take questions as well, because that I feel is more informative. Thank you, sir.
Thank you, ma'am. I don't think you've overshot your time. It's been perfect. We have had some queries coming from the participants also, which we have received queries earlier. So I will take some of these queries. Many of the queries have already been responded to by the speakers. So I will take those live queries now. One query which has come from Mr. Srihant is yes, is it mandatory? I think I'll put this query to Mr. Sudhakar, sir. Is it mandatory to adopt a new CSR policy in view of the latest amendments? We have already in place a CSR policy approved by the board. Kindly guide. And he is also had a corollary. Can a company which is mandatorily required to spend CSR, can it simply transfer the amount to a registered charitable public trust and claim that it has CSR expenditure, or do we need to do anything more than transferring the amounts? Actually, this sort of a query has been coming from even to us, to me personally, from all these small companies where there are very small amounts to be spent, like say 5 lakhs or 10 lakhs. So for them to understand, take a project or to do all these activities is very time consuming and personal consuming also. So they also check with this, whether this will be sufficient compliance or MCA may not be happy. Sir, your response. Sir, you're on mute.
Yeah, as far as I will answer the second question first, because I could register that. And the amount what you have to spend, if you are transferring that money to PM's Relief Fund or PM Cares Fund and all, you don't need to bother for anything. Once you transfer that, it is end of it. For any other purpose, if you are transferring the fund to a registered public trust or a society and all those things, that is not a sufficient compliance. You have to have a small project, even if you are having to 10 lakh rupees or 15 lakh rupees you have to spend. You may have a small project. If you are not able to spend that money directly, you can spend through any other entity which is having that, whatever the compliances are there, the 3-year track record, registered with the 12A and ADG certificates and all those things. Through those companies, you may have to tell them that I want to spend this money for health or education or whatever it is, and give a small project to them. And similarly, even if you are spending that money through that agency, but ultimate responsibility is yours only. So what you have to do is whatever the money you have given to them, suppose even if I am setting up a separate Section 8 company or a trust or a society, even then also it is my responsibility to ensure that whatever the money I have given to that company or society or trust, it has been utilized for the intended purpose. And I need to take the reports from time to time from them about the implementation. And the board has to satisfy itself that my CSR obligations or responsibility have been discharged. And in the case of big companies, what we also do is that we get the third-party audits also conducted, so that whatever the money we are spending, it has been properly utilized by the other entity. That is my answer to the second question. I couldn't register your first question, Mr. Vishwanathan, properly.
First question was whether there is any requirement to amend the CSR policy.
Yeah,
the companies already have a CSR.
Yes. Now I could recollect. Yeah, see, as far as the CSR policy is concerned, when it is not mandatory as such, nowhere it is there that existing CSR policy you have to amend it. But the way the rules have been revised, you have to have an action plan based on the CSR. And similarly, certain new provisions have been brought in. I think it will more or less ask you to revise your CSR policy. Several big companies, definitely you have to have a change in your CSR policy, because what happened is that, say for example, if you have any that real estate projects and all you have having with you, or projects anyway, you have created a real estate or you have acquired a real estate that is to be transferred. So according to me, most probably CSR policies have to be amended, but it is not statutorily required. There is nowhere it is there you have to mandatorily have to amend your CSR policy.
Yeah, I think like it has been mentioned, previously it was a letter of statement of intent. Now it is more of a statement of approach, including the guiding principles, like what Pramod also mentioned. Okay, the next question is coming from Sanchita Vaish. She is asking whether with the amendment of CSR rules, the requirement of undertaking CSR initiatives in program and project mode has been replaced with word activities. Does that mean one-off activities can be undertaken under CSR? Pramod, would like to answer?
So according to me, anything which you want to undertake and which you don't want to transfer to a fund established by the government, there has to be an activity can only be done through a program or project. It cannot be done without a project or a program or without an annual action plan nowadays. So any activity, whatever is written, the purpose is to plan an activity or a project and work according to that. I hope this answers the question.
Yeah, I think what she wanted to ask was like, suppose you are only buying one equipment and giving it to person. So a small activity, whether it can be done or it should be done only through a long-term project mode. But the amount to be spent is very small. Obviously, you can't do a bigger project. But what you say is right. Even that should be as part of your action plan. It can't be very ad hoc.
One thing I would like to add is that whether it is 5 lakh rupees, let us not take it as a very small amount. For a small company, 5 lakh rupees might be a big amount. Okay, number one. Number two, correct. Whenever you are spending even a single rupee for an intended purpose, there should be an action plan. There should be a proper process should be there, how to spend the money. That process is nothing but a project. You may call it as a project, you may call it as a program, you may call it as an activity. But ultimately, there should be a process. Yeah,
exactly.
Just to add, Mr. Vishwanathan, just to add, in the rules, the word activities, programs, projects are very liberally used. Correct. If you see, as far as impact assessment is concerned, there are no words like programs. There is only project. Somewhere it is at the end of the financial year. Somewhere it says at the conclusion of the financial year. So in one rule, you will find 3 different places, 3 different wordings for transferring money, for example, to the unspent CSR account. And so this has to be taken in the right spirit. That's what my answer is actually.
May I add a minute? I may come in for a minute, Mr. Vishwanathan.
Yeah, sure.
I think it's very clear. The new rules are talking about approach. They're talking about impact assessment. They're talking about the objective to be discharged, etc., etc. Even if it's a question of presenting a printing copy or the printing machine, computer printing machine to a physically handicapped person, you should have a reason why you are doing it. There should be some objective intention behind it, whether impact is created or not, how will it sustain. So many things have to be said. As Mrs. Sudhakar and Pramod said, It requires a clear-cut thinking. Even if it's a 5 lakh rupees, you should know how this 5 lakh rupees is going to change the life of the person who's going to receive the money, and whether it is serving your overall corporate social responsibility obligation at the board and the CSR committee level. I very fully agree with Sudhakar and Pramod that it requires maybe a project report need not be 25 pages. It could be 1 paragraph, but it should be there.
Thank you. Perfect.
Thank you.
There are certain queries which have been coming because even the FAQs, the original FAQs, which was issued by MCA in 2014, they said that there is no requirement to provide for unspent amount. But subsequently, the actions of ministry, they were asking people why you have not spent and why, and if they have not spent, please spend and show it to us. In fact, in one LCLT, in 1 or 2 cases which we added, we handled also, we had the same similar situation. Now there are corporates which are having unspent amount, which they are not provided for. They have only shown it here. There are queries are coming whether is it mandatory for them now to spend those amounts, or whether it is mandatory that it is not required for them to spend, and it is only because the reporting, the report which Annexure 2 is only talking about the last 3 financial years. So whether it is sufficient that they spend only the last 3 financial years. According to me, the intention is very clear that you have to spend. It is a liability. It is a corporate social liability, and you have to spend in all. But there seems to be apprehensions, and especially for a professional like company secretary to convince the management that you have to spend, everyone says kahan pe likha hai, where it is written. So then what is the guidance which we can give? Sudhakar sir.
See, I take the rules always as prospective only, and I won't take it as a retrospective thing. So this unspent amount is to be transferred to a separate fund, and all these things have come in the revised rules only. So unless until I have been compelled to do that, I will take a liberal view of not spending that money, whatever else there in the past.
Okay. Pramod sir.
I agree with
Anyway,
I equal the same.
See, substantially many of the companies have already, like Reliance has overspent. Okay, so this not spending amount, in fact, the slides which when we did a data mining, we found that around 10,066 companies were zero spend companies over a period of time. So they had a liability, still they were not spending. So probably MCA was right in chasing them and telling them that why don't you spend? Because if you have a liability to spend, you should. It is like declaring dividend and not giving dividend to the shareholders. That's not right. Correct. The query for next query has come from CSR filing. I think the technical query whether CSR filing has to be done by corporate or by the agency. It's by the implementing agency. That's what it's very clearly said. Yesterday we had a query which has come from Surya Narayan ji. In fact, I'll just take it to you. More of a technical query. He has said that section 135 of the e-book of Companies Act indicates subsection 6 of section 135 that was brought in by the Amendment Act of 2019 is to be notified. However, to Rule 21I as well as Rule 10 of the CSR rules notified in January 21 cover the concept of ongoing project, though subsection 6 of section 135 is yet to be notified. So please, can you clarify this seeming incongruence? It is typical of MCA to have done this. Pramod sir, you are closer to the powers that be. So what is your views?
So, according to me, I have not, frankly, I have seen the query, but I have not been able to apply my mind on it. To my understanding,
essentially he says is that when the section is still not notified, how can the rule be notified which talks about an ongoing project? It's only a technical incongruence, but then probably MCA could have been more careful about it.
Yeah, so I'm sure this would have been brought to the notice of MCA, and they would be otherwise also issuing FAQs. I heard that they are planning.
That's what they are. Yesterday there was a session of ASSOCHAM, and the Joint Secretary said that they are in the process of preparing FAQs based on the responses which they have received from.
But one thing, Vishwanath,
the industry.
They say I have seen the CSR amendments, whether it is the section 135 or the rules. Whatever the amendments have come, if I am not wrong, all have been notified. I don't think anything is pending from 22nd January 2020.
Probably what has happened, sir, the MCA ebook is not at all updated. Probably,
yes, that is, I was about to say that MCA ebook might not have been updated after the, in fact, as far as I am concerned, I have, because whenever any amendment comes, the moment it is notified, I have my own notings also. I don't think, as far as CSR is concerned, anything is pending as far as which is to be notified.
Probably MCA ebook is still not amended to that extent.
Quite possible.
Yeah, role of CFO has been analyzed. And now one question is whether it will, that role, that certificate also will form part of the annual report. Even though now it is not, but probably over a period of time, it will become part of the annual report, part of the CSR report, CFO certification. Whether they will come out with any format for CFO certification. Pramod, sir.
I think it's more for internal governance of the company. It is part of the internal control, and it will be one of the internal controls which will be added in number of internal controls that that the company is having. And the certification is not required to be published, according to me, in the annual report or in any other on the website. This is more for the board to ensure that this certification is given by CFO to them to satisfy the utilization of funds.
Sir, I would like to add one thing. See, as far as the format is concerned, I don't know why we always crave the MCA to prescribe the things. Why can't we do on our own? Why MCA has to prescribe a CFO format? It is for the company, it is for the board as well as the CSR committee to ask the CFO to give a certificate so that they will have a comfort. And what is the certificate? Basically about what is the CSR by plan, what is the approvals given, and what is the intended purpose, whether the money has been spent for that or not. Can't, as company secretaries, we devise a beautiful format and give a comfort to the committee as well as to the board? Why we have to ask MCA to prescribe that?
I completely take your point, sir. Listen, there is one, I don't know, unnecessarily these people, MCA has talked about companies which will have a liability of less than 150 lakhs not to have a CSR committee. I don't know why they should create that anomaly. And they have also created one saying that private limited companies with two directors should form a committee. When two directors are only there, the board itself becomes can do function. But then they want a committee to be established of two directors. Similarly, this is another thing which they have created. I don't know what was the intention or to whom it will be benefited. Because once you have a committee, once you create that, when you understand the liability only, you will come to know whether it is 50 lakhs or 49 lakhs. So if you have a 49 lakh budget, you don't have a committee, and you have a 51 lakhs, you have a committee. I don't know what benefit or liberal is this they have done by inserting that provision. Any thoughts on any idea which you can whether that was?
See, Vishwanathan, what is happening is, in case of private companies, when they say two directors committee is sufficient, we are presuming that the company is having only two directors. The company may have 4 directors also. Even in that case, you can have a 2-director committee as far as private companies are concerned. That is some kind of a relief has been given, number one. Number two, as far as the this 135(9) is concerned, what it says is, if your CSR spend is less than 50 lakh rupees, you don't need to constitute the committee. Now, where is there by that the CSR committee should be there? That committee has to work out what is my CSR spend. Why can't the board itself work out, or asks the CFO or the company secretary to work it out by how much we have to spend? If it is less than 50 lakhs, the board can decide it. I don't need to constitute a committee. Or if I am already having suppose a committee, I can decide it that to scrap that committee altogether if I don't need to spend more than 50 lakh rupees. So it is it is a kind of relaxation or power given to the board. Let us enjoy that. Why to question that?
No, I'm not questioning. In terms of the CSR compliance requirement, the first requirement is to constitute a committee. As soon as you reach 5 crore of profit, we don't even calculate the CSR liability. As soon as you reach 5 crore, you have to create that committee. Then you have to find out whether you have a profit or not. So the constitution precedes calculation. So now we probably will have to do calculation and then go to constitution,
You see,
because the threshold has been given.
According to me, even if 135 gets triggered, I will work out, the board can, according to me, the board can work out what is my CSR spend. If that is more than 50 lakhs, I will constitute the committee. If it is less than 50 lakhs, I will not constitute the committee. It is not like it, the moment 135 triggers, next moment I have to constitute a committee. Nowhere it is there like that. I have to read the section in comprehensively. I have to read section 135(1) also. I have to read section 135(9) also.
Perfect.
So I will take a call after reading the entire section as well as the rules. So I will not constitute the committee if my CSR spend is less than 50 lakh rupees.
One more query, sir. This capital asset, ma'am has also talked, you have also talked about the expenditure. Now, what happens if the capital asset has to be sold? Whether the money should be retained by the entity or it should go back to the company?
Asset is not to be sold, asset is to be transferred. It's not to be sold.
No. Subsequently, once the asset is transferred to the NGO or the Section 8 company, after some time it needs to be sold. Now, at that point of time, for some reason, so the fund which will get generated, this is one of the queries of the participants, whether there will be a liability on the NGO to give it back to the organization, or whether it has to be retained there. Probably a very hypothetical situation, but then nevertheless someone is asking.
But okay. let me attempt to answer this question. That once the money has been given by the company to a Section 8 company, which is the implementing agency, it is given away like a contribution. After that, the company, I don't think so, have any right over that capital asset. And even if it is having a right, it has to be transferred back to the NGO or the Section 8 company. So I don't think so there is any, if at all there is a residual value of the capital asset after being used for a particular social project, that goes as a surplus in the CSR foundation itself, whichever is there, and the money is utilized then and there for any other project. But it cannot come back to the company in any way. That's for sure.
One more query is relating to this CSR surplus.
Vishwanath, I want to answer the earlier question a bit. There's a Hindu tradition. Whenever we give something in donation, we sprinkle some water and say, in Sanskrit, when we say namama, namama, that is, it's not mine. That's what we say, namama, and then give it away. So let us say you give a cow in a dana, or you give money in dana, whether the fellow who has taken the money goes, drinks it, or he uses for his family is none of our concern. It is gone, is gone. A registration requirement has come for that purpose, saying that you don't own it anymore. Ownership rights are fully transferred. So the question of getting money back into the company is far-fetched.
And similarly, whether the companies can sell the asset also, I have my own doubts. I'm not very 100% sure of that thing. But according to me, those assets, the CSR assets, cannot be sold by the Section 8 companies or the registered public trusts or the societies even.
Only one point that comes in, Mr. Sudhakar, is that let us assume that I give a grass cutting machine in donation to one, say, family or a particular village. That may wear out over a period of 4 years. It may have to be scrapped. It is technically sale of that asset. So, except for wear and tear, as you said rightly, if it's a civil structure, it may not be sold at all.
Sir,
if it's any wasting asset, it can be sold at a depreciation.
Sir, you take it as a land and building. Say, for example, I constructed a hospital. Now, suppose if you are selling out that hospital building as well as the land, can that company do it? According to me, it should not.
And there'll be a covenant, and there'll be a covenant in our donation structure, or say CSR project structure. When we assign the project, there'll be a covenant on this for sure. If not, let us try to decide in this forum that we'll put this covenant hereafter.
Correct. Agreed.
Yeah. I just recollected Rama ma'am saying very nicely about ongoing projects. So corporate should not bring that ongoing projects in the fag end of the financial year and lose one complete financial year for implementation. So instead of bringing it in February, they should take it to April, so that you get one full financial year for implementation. That's a wonderful idea which she has given. One query now, sir. CSR expenditure is done. Standalone basis. Sir, one query is about that. What exactly does this mean? Company, holding company, and subsidiary company in the definition part.
See, this rule is not a revised rule. It is an old rule only.
No,
when you were discussing with me yesterday this question, I have read that particular thing. And if I equate it, according to me, definitely the moment that the way the section is, the rule is structured, the moment section 135 gets triggered, your holding company, subsidiary company, associate company too have to comply with. To substantiate my interpretation, what I can say, IFRS, if you take it, every equity or debt listed company, and similarly, every company having net worth of 500 crores or more, to them, the Ind AS is applicable. Not only to those companies, even to the holding company, subsidiary company, associate companies of those companies, Ind AS is applicable. So the way the rule is there, though it looks a bit absurd, but it looks like it is applicable to them also. And it is high time for us to seek a clarification from MCA. All these days, I mean, nowhere this question has come up. How can it, I mean, what is the correct interpretation of this? Only in this forum, this question has come up.
Thank you for some of the participants who have raised this very pertinent query. Even though it was enough,
I would like to have Mr. Narasimhan's view on this thing, Dr. Narasimhan's view on this.
Unfortunately, I did not apply my mind on this particular question. Therefore, I do not
kindly do it. No doubt about you have to do it right away. But just kindly do that. Pramod, I also request you, and Rama ma'am, you also. And we may, get back to SAYS, and then they will give it to the participants subsequently. But this is a good question which has come up. According to me, this is a very good question.
Okay, we'll do it in 2 days' time. Yeah.
Thank you, sir.
Yeah. 1 second. I think not in line. The company, warning company spent expected CFO role, scope of. Sir, now CSR audit is still not seen the light of the day. But then, will this new rules enhance the scope of statutory auditors and secretarial auditors also? Apart from the general compliances which we have been looking at, would it be required to extend the scope per se?
May I pitch it? May I pitch in for this?
Yeah, please. Please.
I feel that there will be a new set of professional requirements saying that impact assessment agencies will have to come into play, and impact assessment agencies will submit a report which will form a basis for both secretarial audit and statutory audit to make required certifications in their final audit. Because I don't think if a statutory audit, secretarial audit goes into impact assessment, without impact assessment auditing, I mean, already CFO is giving certification for this money spent. It's already being done. Board and Csr Committee are already taking view of all these things. Therefore, enough gross level audit is happening on that. Now, the question is whether the money has been spent the way the approach or a policy has been defined. That's where impact assessment agencies will come in play. They will give a certification which will form a basis for the statutory auditors and any other audit to make a statement about whether money has been well spent or not. Otherwise, the CFO certification is more than enough. That's my view.
Okay. One question has come is
even I agree with Dr. Narasimhan. According to me also, that as far as your statutory and secretarial auditors role is concerned, it is not enhanced in any way. Only thing is, it is that certain additional compliances have been prescribed, as with CFO certification is there or impact assessment is there and all. And suppose transferring of the unspent money, blah, 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 these are there. So as far as secretarial audit is concerned, whatever the statutory compliances are supposed to be there, whether they are there or not there, that is what they have to ensure it. I don't think that they need to probe into anything further than that.
Someone has asked whether CSR 1 will be a one-time filing or it will be from time to time. I think yesterday in one of the seminars, MCA has very clarified that it will be one time only. But there as a corollary, immediately a professional asked, what happens if the registration of that ATG registration is cancelled of the entity? He said, that at that point of time you can check. But then he was very clear that diligence has to be done by the company. So whenever, even if CSR1 has been registered and you know that the ATG registration has been cancelled, you should avoid the agency from participating, or you should not be making them the implementing agency. I think we have substantially covered, sir, and we are also 12:37. So
only I would like to add one thing here. As far as somebody asked this question, you mentioned about CSR1. Though it is one-time registration and all, preempting from this, what the companies have to do is that whenever they are engaging the implementing agencies like this, on a yearly basis, that they have to take a certification from them that they have the ATG and 12A registration under the Income Tax Act very much there, and they're qualified to be the implementing agency. Then only the company has to entrust upon them, otherwise they should not deal with them.
Perfect. So I think
on the receiving
sir,
end,
if you don't mind, Mr. Vishwanathan, one small thing that I would like to add. There was a query about this tree plantation and how do we book some administrative overheads, transport and all. So just again to draw on my experience, we also had similar such activities where we planted some 30,000 trees. But there what we did was really go to an NGO and ask them to do the tree plantation for us. So then all these vague things will not, where what fits in, where do we give some tea, coffee allowance, transport allowance, what happens, what is overhead, what constitutes administration. These type of queries, we don't have to unnecessarily break our heads. So it's always good to identify an organization that falls, which is compliant and which falls within the purview of Section 135. And fund them in a program mode. So it is not just tree plantation. There are activities that go around tree plantation, also geotag it. So, all this due diligence will then come in place. How do you geotag this? How do you see whether, it is really growing at the end of 1 year? Then you talk of impact assessment after 2 years or 3 years and say, is there any fruit bearing tree? So then application of mind will have to be done, whether it's a fruit bearing tree, whether the community is, getting the fruits of their labor, whether there is an SHG making, jams and pickle. So this will then constitute into a program mode. Just saying that I will plant a tree will be a one-off activity, but how do you create and design a program around it? How do you create an impact study around it? And how do you avoid unnecessary complications of doing it by self? Rather, identify the right organization and do the activity. This would be my advice when such type of activities are undertaken.
Very well explained. Very well explained. I must appreciate that.
Great. I think Surya Narayan ji is trying to ask some questions. Surya Narayan ji, can you unmute yourself and speak, please?
Yeah.
Sir, you have to unmute.
Yeah. Am I audible now? Good afternoon to everybody.
Yeah, sure. Yes.
Good afternoon.
Sudhakar sir, Sudhakar sir and all the other members, panel members. First of all, my thanks for the very insightful, discussion we had just now. And just adding, I had raised that query on whether this ongoing project has been notified or not. And I agree that the ebook might not have been updated. But to my knowledge, what has happened is this ongoing project concept came in the 2019 Act. And I think it came as an ordinance, and that ordinance subsequently lapsed. So I checked the MCA website. I am not able to see the notification of that particular section 135.6. Whereas the commencement notification of 22nd January, it covers the Companies Amendment Act 2020, which came in as an act and not as an ordinance. So after checking this, if you would be able to, respond to this query, I'll be grateful, because I have this query in some of the companies which I'm just taking a look at. So that is all that I wanted to say. Thanks.
Yeah, what I can do is that whatever the notification based on which I have told you that nothing is pending according to me, those things I will send it to Mr. Vishwanath and he will forward it to you. And I'm sure that
Okay, yeah, sure.
your queries will be answered. But still, if anything is there, kindly let me know.
Sure, Mr. Sudhakar.
Sure.
Thanks a lot.
Sir,
Thank you,
Sudhakar,
sir.
sir,
Thank you very much.
there have been requests from a lot of participants for your presentation. Similarly, from Rema ma'am also. Now, Rema ma'am, I found that there are some NSC related things. So if you can maybe remove
I
those
will
things
send
and
another one.
send us the contact one. And Sudhakar, sir, if you can permit and
Yeah,
send
yeah,
us
I
the
will do that. I will
presentation,
send
we
that.
can also share.
Sure, sure.
Okay.
I will send my presentation to you.
The entire seminar is also available on YouTube, and it will be available in the Sage Governance Advisory channel for viewing on a later date. And we find that many of the previous 3 sessions also, we have found that many of the people who participated have gone back and seen that, and they have found it to be very useful.
But Vishwanath,
I think
let me add one thing, that this presentation, whatever I have made, is only for the purpose of the time factor I kept in mind. So it is a very loosely worded presentation. Kindly don't depend upon that. And
no, correct.
webinar, I always
I
mention that if anyone is having any query, they can always be contact me. My number I have given it on my presentation itself. They can always contact
Thank you,
me.
sir. Thank you so much. That is so kind of you. So the
Mr.
participants
Vishwanathan,
can
just one last word
sure.
I would like to say to the participants is that I think it would be good hygiene to take the policy that you have internally and get it vetted by a CSR consultant or one of these, one of the consultants, whoever are available, and to see whether it matches the new amendment, so that at least from a due diligence perspective, you are having the policy, it is updated, whatever is not there, it is done, whether the charter also has to follow the policy or lays down the ideals of the policy. So all that hygiene checks can be done. That is point number 1. Point number 2, also just revisit all the programs in the light of the term and other thing, and quickly start preparing an action plan, so that at least come next month we are all prepared. And that's going to be a huge challenge, trust me, because most of the NGOs today are running helter-skelter, trying to manage the FCRA and other type of things that, a lot of internal things that they're having, their income tax, the year-end closures and other things. So this is going to be really a huge task and challenge, but I would advise just to put everyone's head together, do the annual action plan, get the policy in order, so that at least 1 tick the box, 2 tick the boxes are done from our end.
Perfect,
Yes,
perfect. In fact, I am also part of an NGO, and we have been struggling to open a bank account with State Bank of India. Initially, they wanted us to open it with Delhi, and suddenly they said not only Delhi, you have to open one in Bombay also, and the entire requirements of Bombay and Delhi are entirely different. So we are now struggling with a small organization. We are struggling to open 2 accounts, and we don't know what will happen to the existing FCRA account, because those we don't have a mandate whether we can close it and transfer that. So FCRA is giving a really a good we are all on our feet. Sir, now I think we can conclude. Sir Narasimhan sir, can you sum it up? Anant Subramaniam is also there. I would request first Narasimhan sir, and then finally Anant Subramaniam to sum it up, and then we can close the seminar.
Actually, I mean, it has been very helpful to me personally. It's a very instructive kind of a seminar we had today, because Pramod, Mrs. Sudhakar and Rema have really presented their perspectives. Had been very helpful, definitely, for those people who are in practice, people who would like to pursue this CSR, I think is a very important thing. In my personal view, CSR included into the statute is in a way statement made by the legislature and the parliament that they believe corporate citizens can do better social activities than themselves. MPs and MLAs get some kind of money for the constituency development, but we don't see our constituency developing because of possible leakages. And they believe that corporate citizens will see that such leakages will not be there. When I hear to the presentations today, it has been fortified, and actually strengthens the view that the kind of changes that are brought in to see that there's absolutely no leakages, even from those mischievous companies. Of course, well-meaning companies will never do it, but those mischievous companies who do only the make-believe kind of a thing, that's also completely plugged. And I think as Rama said correctly, it's a very professional approach to implementing CSR activity as such. I mean, I go back to our village traditions. When harvesting is done, the zamidar or the richest person in the village will measure output to the barbers, the washermen, the housekeepers, etc. first before he allows the produce to go his home. This is what exactly is to be done in this case, CSR also. When you made so much of profit, put 2% away to the social cause and take it as a serious affair. It's no more a child's play. It's not the question of paying a tax anymore. This is a purpose to be served is what exactly this CSR would mean. That's what I understood from the whole presentation. And I think a lot of good statements were made. I don't know whether I should go through all those things, but I just say 1 or 2 points is, that is say, Pramod's statement saying the policy should contain approach and direction and annual action plan. And you use the word, it's a dynamic document. That is not only that you create a plan, you monitor it and see that the implementation is in accordance with the approach and objectives for which the whole CSR money is going to be spent. And then impact assessment, I think we have discussed enough of it. CFO's responsibility has been multiplied. That's a very important point, because there could be some fellow colleagues who are becoming CFOs. They need to take additional responsibility. And one important and confidence-giving statement he made is that MCA is very approachable and approach them in case you have got any questions. That's very, very important. All of us should raise questions. Unless, I mean, it's like this, crying baby gets the milk. Unless you shout to MCA, MCA does not understand what is the difficulty. The way they couch the language, they don't know what they have meant, because they don't implement any CSR for sure. They only imagine how it is getting implemented, and they would have written some sentences. Therefore, we should approach, tell our pain, wherever it is paining, then probably they will give you the remedy. Sudhakar has given a lot of things. I think he started saying that it's not a charity, it's a continuity of significant contribution to social good. That's an excellent statement. I liked it. Yes, it's not a charity anymore. It's a continuity and significant contribution to social good. You have to define what social good you would like to do, and you continue that effort over a period of time, so that whatever social good you would like to contribute is sustained for the real social good. And then his observation that reason for creating one more CSR department, I applaud that. I think in case we have the capability to convince our managements, I think we should insist and get such kind of thing done. That's a excellent statement. And then this transfer of unspent money, there was a difficulty he has expressed. Yeah, I would rather react in a different way. I would like to define my projects which can be completed in a defined period of time, rather than talking for an ambitious project. You can have a long-term project which can be broken into short-term projects, and whenever we clear these objectives and budgets, we'll clear only short-term projects. Therefore, the question of spending, transferring unspent money, etc., does not happen at all. That could be one way of looking at it. And reporting is going to be a big task. So company secretary has got one more checkbox and one more table to fill in. And therefore, yeah, you need to have one more assistant in your thing. Rama's presentation about impact assessment approach is very interesting. And I think it's she very well highlighted that. I like the way she approached the whole subject. That's very important. And then she also has expressed that this will help weed out those kind of implementing agencies which are namesake rather than serious about the project. Unless you have an implementing agency which is serious about the purpose for which it has been established, we cannot achieve any social good. I think it's a very good thing. And then on the whole, it was a very enriching presentation, and I learned a lot. Thank you very much.
Aranta Subramaniam. We can have your thoughts and then wind up. I think you need to mute, sir.
Yes, I endorse the views expressed by Dr. V.R. Narasimhan about the usefulness of this program. Coincidentally, there is a news item in today's business line where the Accenture CEO talks being successful, being sustainable makes a business more profitable and successful. Now, this is coming from Accenture and those who have been spearheading the different era. And this is very significant. And it was very timely in the sense that today we had this discussion about CSR. But I go back to what my good friend Mr. Dev Bajpai said, that eventually the idea is that that it has to be aligned with the business in which one is in. And that was referred to by even all the three speakers. To my mind, this CSR as a concept is very much to become an act. Like what Sudhakar in the earlier, when we met for a briefing, he talked about this producer companies. Now, similar to that is a CSR. I think the title which we have chosen is a CSR by an act is very apt. I also got to know the difficulties in the Indian context of being, the challenge between being prescriptive and being judgmental. Now, this is a challenge which the regulators are facing, the people who are complying are facing, and probably, in my view, I would say it's a transition which is happening, because we have been used to so much from the 1956 Act, which did not cover many things. Over a period of time, we have gotten used to things what the regulator wants us to do in a manner in which we would like to interpret. Now, obviously, there are going to be instances, even in SEBI, we have seen that, where the regulator has left certain things unsaid, believing that the right approach would lead to the right results. So somewhere I think this challenge with this sort of a dilemma will continue. But overall, the seminar, all the three, Pramod, Mr. Sudhakar, Rema Mohan, all the three of them stuck to the timelines. They were very extremely pithy in their observations. And even while not getting into the nitty-gritty of the entire exercise, there are a lot of information which one could gather. And to the practitioners who have attended and all those who are going to be watching on the YouTube, it is precisely what the seminar was meant to be, that it was just a trigger or an opener for practitioners to go into the details, delve into other areas to find out more about this subject. Because this subject, as Rama Mohan was talking about, this plantation of a tree, probably in its own way, this is going to spawn off a host of other intermediaries who are going to be associated with this concept for long days to come. And probably it may have already. And I, as somebody who is passionate for our own professionals, see that there is a huge amount of scope for even practicing members. Because yesterday I was attending a seminar where there were reports which were talking about independent firms being assigned for related party transactions. Now, obviously, the person who spoke, I could gather that these were large, maybe the foreign firms which are there, very much ubiquitous foreign firms which are there all over. But I do feel that that independent firms, it's not as if the firms are become independent just by they are foreign, but independent firms with a certain attitude and certain integrity are available locally also. And I'm sure that this CSR, the rules which have been amended, should enthuse practicing company secretary firms. It's not as if we are going to be asked to come and do the job on our own, but nevertheless, we should equip ourselves with the nuances and the niceties of the rules in such a way that over a period of time, this itself would be a sort of a separate avenue of audit for practicing professionals. And as far as employed professionals are concerned, as we have mentioned, he will be the go-to person. The CS will be the go-to person because there is a lot of scope for interpretation and different dimensions of interpretation. And we can't get into a legal situation every time. So he is a man, he's a local counsel, in-house counsel. So he has a tremendous opportunity to not only enhance his own worth within the organization, but also contribute towards this very, very novel, but yet redeeming the concept of corporate social responsibility. Thank you very much.
Thank you, Ananta Subramaniam. Thank you, Pramod ji. Thank you, Sudhakar sir. Thank you, Rama Mohan ma'am, and all the participants who have taken time out for this excellent seminar for almost 2 hours now. We will have more such seminars, and I have already put it in the chat box that any suggestions you have, you can please share it with us in our email ID. And we will also, after we close this seminar, we will put the link in the YouTube channel of Sage so that you can watch it again, and you can also share it to your people. Thank you all, and have a happy weekend. Thank you.